JV Cycles here with an update on August the 26th. So I'm a bit late this week because I've been very busy at work. We have budget work, we are reporting on status, and we have the national elections where I'm involved, and we have the salary negotiations at work. So a lot going on, and frankly this market is just very little inspiring, very boring, and kind of disappointing for me because here is the 3.5 year cycle, and at my work, for instance, I had a presentation on my cycles work, not only for stock markets but human fertility and earthquakes and climates and so everything. And I said back here that market will probably top out winter 2025, and that is where I advised my employer to sell all of our stock market shares because of the risk of such a correction here. There was a potential, in my opinion, that we could erase all of the gains in this bull market with a low around summer 2026. However, that was only a potential for such a downside, but you never know how these 3.5 year cycle week periods, how they play out, because they can also end up more sideways, and that is what it looks like right now. But still, as you see, the cycle here is bearish into next summer, and right now my work suggests this fall we will turn down, probably with a target around the April panic lows, and sometime next year, and then we start a new 3.5 year cycle and rally for the next couple of years. So I still think my employer will be able to get back into the market at a lower level than we sold, but we have to wait and see, because this breakdown was a false breakdown, and you can notice it is at this point in the cycle, and that has happened before. We kind of have an analog back here, not quite as deep as this correction we had this year, but a deep correction in the market, and then the market continued. And this is even less similar, but also at the same point in the cycle, and then the market recovered and rallied further. We see this one in 2015 topped at this point in the cycle. Here in 2018 it's pretty much almost the same point in the cycle, and it is the point of the cycle where we are approaching. So I also have some other analogs, and I will show them, or some of them. Let me see, I have them here. So I have these in blue and purple from 1965 is my favorite in blue, and we have this other one in 2014. Both of them are suggesting we pretty much have reached the upside potential for this extended bull market, and we should now go sideways into October, November, and then starting a downtrend. I have two other scenarios that are a bit different. I don't favor them as much. They had quite a deep correction here early in the rally, and they are making an earlier top in, well, around September, October. And then we have a last one that, well, it is frightening similar regarding this correction, almost 20%. It's the one from 1980, and this one has a lot more upside going here. But I don't favor this as an analog, but there are some things pointing to it could be possible. But anyway, I don't think we have quite reached the end of this extended bull market. So I am expecting September correction, and then a final last rally after that, because that is what these analogs are suggesting. And because of cycles, the markets are repeating. And if we put this into my 17-week cycle, we see here is my scenario. So I'm kind of looking for, you could call this a shoulder, head, shoulder. So a topping formation now this fall and into New Year, and then some kind of a breakdown and maybe back testing before we have a capitulation into the late spring or summer. So that is the scenario I'm looking for. And if we look at, call it the wave structure here, I'm using my wavelets here, and this purple wavelet is normally showing me the 10-week oscillation. I've been talking about the 10-week oscillation a lot earlier, and currently I think we are seeing some confusing signals from this purple wavelet, and that has indeed happened before. It is when we have a very long extended 10-week oscillation. Then we often get this camelback pattern with this double top formation in this purple wavelet. And as you see here, also we can see kind of this double hump, while in this one it has almost merged into one, and here it has even merged more into one. You can only see one here in this purple wavelet, but I think that is what we are seeing here. So the next the smaller wavelet is the light blue one, and the even smaller one is the yellow one. So I think you see this here, we are probably halfway in this 10-week oscillation, and the yellow one shows 1/4 of it. So this is halfway, this is what is left, and we see we have one of this yellow going up and down, and now we are on the way up, and this small stagnation we are seeing yesterday and today, I don't think we have quite reached the top of this yellow one. So a final push to the upside is coming the next few days, and then I think we will have some kind of a B/C corrective move into around mid-September, and then this final rally could begin. So that is what I'm looking for going forward, and as I've told you, I think this market is just so boring, and it's stretching and stretching, low volatility, really, yeah, it's euphoric. And one of the reasons that I'm very careful, or call it frightened about the market, you see here is from zero hedge. Market valuations don't matter until they do, and here this looks like an average of many indicators showing us the valuation, the average of many valuation indicators. And here in fact you see the 28-year cycle. So we have a low around 1920, the late 1940s, the late 1970s, and then the financial crisis, and right now we are at the top of the 28-year cycle, and in fact also the 56-year cycle that I've been talking about earlier. So that means every time when we are at this point, a very expensive market, high valued markets, and we have the 3.5-year cycle, it is bearish, well then valuation does matter. Well, right now it does not, but it should matter. It should be a problem when this market finally has stopped and going forward into next summer. But then it won't matter anymore, and we rally with the next cycle, and then it matters again after that, and it will be a problem. See you.